Where hopes and dreams meet ends and means. The markets are on edge, and so are traders across the world. Tensions are flaring again in the Middle East. Oil prices are spiking. Tech giants stumbling under the weight of expectation. All of this, and we're staring down the barrel of two crucial central bank meetings that could rewrite the trajectory in the markets. But that's not the whole story, because beneath the surface, tectonic plates are shifting. The Fomc 100 and European stocks eked out gains again on Tuesday, with the Fomc 100 closing up 0.2%, led by a rally in commodity stocks like BP. Germany's DAX also up 0.8% after upbeat economic sentiment report. The Canadian top 40 up. Pan-European stocks 600 also following suit, up 0.4 and 0.5 respectively. But across the Atlantic, US stocks are struggling. There's a beautiful ocean between Europe and America. Europe flying, America and its tectonic plate sinking. The Dow Jones, it lost 0.7%. S&P 500 also dropped 1%. And the Nasdaq, everybody's favorite tech index, also down 1.6%. Tech stocks leading that decline because blood all over the place, uncertainty. Apple cannot shoulder the weight of expectations at all. Tariff news coming in hot. Markets are jittery, and there is good reason. The Fed's two-day rate setting kicks off earlier today. Tomorrow, more of that. Then the Bank of England follows with a policy announcement. After months of tightening, traders are asking, is this the pivot? Or is there more pain to come? It looks like if you're on the other side of the Atlantic from me, you might be in for a little bit of a tough time. Big tech is bleeding out. Apple, we mentioned it before, that there it is. Let's check it out on the absolutely beautiful charts from, here we go, Patreon charts. No, go. Apple will some have information there, but that's interesting take on Dixie. Also inform your opinions. We're going to go with Lipson channel. That'll do a business, and then we'll go across to Apple. Here we go. Nice white bright screen for us all there. We just gave up on the polar bears. You know, Trump's burning that beautiful clean coal. I'm not sacrificing myself for yon polar bears, and they do attack viciously, as we'll see later in the show on the Lipson section. So a big difference across the Atlantic. Apple here, a beautiful foliage, an exotic delight. The market's former darling taking the heat now. It's going, getting its forest chopped down. The stock itself has fallen 18% from the all-time high in December and shed over 700 billion in market cap in the last week alone. There's the weekly chart. Got it on the line. We shall change it to the candles, as that is what traders expect here. Degree of accuracy, and they want to know direction. So big tech bleeding out, Apple taking a lot of the heat, but despite that biggest weekly loss, you can see there, since biggest weekly loss since 2022. Brutal candle there. Despite that, it's not the only stock that's suffering from AI hype fatigue. The Siri upgrade, key pillar of Apple's AI strategy, was delayed. Morgan Stanley cut the price target from 275 to 252, and slashing their iPhone sales forecast in the process. Without a killer AI app, Apple, once the reliable stalwart of this tech index, is losing that allure. Once its tech upgrade cycle falters, so does its stock price. And it happens quite quickly, you see, even ahead of that cycle degrading, the stock price takes the hit. And bear that in mind for later in the show, because we've got something interesting coming up and a very interesting point about the markets in general. But despite all of this heat, and if, well, actually not despite, including, as if it wasn't enough, Trump's tariffs on China threaten to add $2 billion to Apple's costs over the next 12 months. When it rains, it pours. Tesla, it's not feeling much better, is it, folks? We had this short trade. It worked out very, very well. And it continues because the stock is down now over 53% from that high, which we managed to call in advance. Shout out Wiki. And this huge 53%, there it is. Fast chargers peaking at 250 kilowatts, but the Chinese competitor BYD just unveiled their own platform that charges at 1,000 kilowatts. That's not a gap. That is a chasm, a continent of difference. BYD isn't just outpacing Tesla in tech. There's the BYD chart, and oh my goodness, look at that difference. It's expanding its footprint with 4,000 high-power charging stations across China. And they're talking about opening a new plant to start production in Germany. Oh my goodness. Xiaomi, a sexy smartphone giant turned EV disruptor, now expanding production targets to 350,000 vehicles this year after its SU7 sedan. It's basically a Porsche Taycan with like McLaren DNA. It's very nice. Sold out almost instantly. Not a big surprise. Western automakers are playing catch up and they're losing ground fast. The problem with it, comparison between it and a Porsche, is it's not a Porsche. AI and arms race continues with Googlies. Here they are. Ooh, look at that. Dangerous flashies. That's on the weekly. Drop down to the daily time frame. You can see it's already taken a big hit there. 50 simple still above the 200 period moving average, but on to the 4-hour time frame. We don't need to be on these extra hours. Let's get into the regulars. As you can see, that's quite a dramatic drop. 4-hour time frame, you've got a gap close in around 205. So with fair value gap to the top side, couple of gaps on the way to the previous high there. It could well be some moves left. Chocolate left on that biscuit for Google. Let's see how the AI wars evolve. And in that evolving world, it's all about acquisitions and development, right? Tech companies make huge multiples there because of the growth narrative. So circling that growth narrative is this really cybersecurity for Wiz. Could be Google's largest ever deal. $30 billion. Wiz specializes in cloud-based security using AI, and a successful deal would bolster Google's cloud dominance, probably put it over the hill at this stage due to the unfortunate development there over at Amazon in the last 12 months. But AI is a fickle game. It changes quicker than cloud computing. Investors have been skittish since Chinese startup DeepSeek released a low-cost AI model, undercut big names in January. Still haven't seen the full picture on that financing and that chip stack. But hey, let's put pressure on the tech giants, deliver. It's not just innovation, which we need lots of quickly. We want profitability, fill in the back end without an R&D lag. Isn't that right, ladies and gentlemen? Meanwhile, geopolitical tensions adding fuel to this awful combustible situation we're finding ourselves in. Hamas run health ministry reported over 400 deaths in Gaza following airstrikes, marking the end of the ceasefire. So while we're not looking to speculate on that type of tragedy on this channel, which has pushed oil prices higher, this has an impact on energy that has a follow through for all the classic hedges that people use in times of uncertainty. Miners, energy stocks, all leading gains in Europe. Bigger question, is this escalation going to spiral into a broader conflict and man's inhumanity, man causing trade spotting to get even more upset? The main event, though, is the central banks. Them there, central banks. Stand up, Jerome. Is that going to absolutely tank the market? It's very possible. It's very possible, sir. We're going to keep an eye out for it, because if it does happen, and soft yellow says it might, even though it's pink. Stand up, step to the podium, Jerome. We want to know. We want to know where, for a start, where has my picture of your beautiful podium gone? That was quite helpful. I did appreciate it a lot. I don't see it here. Maybe I'm on the wrong. I am. Here it is. Come back. There's your horizontal. And that's useful to a lot of different people looking for that central bank meeting. Should be in around Wednesday, right? So we'll make it actually helpful. Oh, maybe I had it. I don't know. I'm not sure. It's moving too much because I had it, but you probably had it right there. You know, you did. There it is, 19th. Right. So you've got that 19th Wednesday, and then UK Thursday. What a lovely flag. And happy people in the UK, because everything's going up. It's brilliant, especially the pound. The main event is central banks. The Fed, they've got the steering wheel on the global economy, and well, there's a screaming match going on in the car. Are we there yet? That's a question from a previous age. Now it's, are we going to survive? The markets are desperate for a clear signal. Inflation moderated over the past 6 months. Core prices remain very sticky. A rate cut would be a lifeline for struggling tech and growth stocks, and that would suck a lot of liquidity. Markets would shoot to the top side. I'd be looking at those leading stocks in the leading indices. Powell knows cutting too so soon is the worst mistake he can make. We talked about this 4 years ago, folks. If you want to find that video, you link me. I would like to see it myself. The Bank of England faces its own dilemma. The UK economy has been teetering on the edge of recession. Inflation still running hot over here. Loosening policy too soon could undo a lot of hard-fought gains, and we need to shift that liquidity. Sorry, we need to shift those off the balance sheet, all the debt off the balance sheet into the private sector in the UK. You can absorb all of it, UK private sector, while absorbing all of these national insurance hikes. Go for it and provide the jobs, those high-quality jobs we need, because the government is cutting disability allowance. The stakes couldn't be higher. If the Fed and the Bank of England pivot towards easing, we'll see a relief rally. It'll be fantastic. A reprieve for those battered tech stocks, of which Lipson is one. Leveraged markets get a little bit of a relief that could lead to a very strong move, right? Shout out to everybody who heard that last sentence, knows what I'm talking about. If the Fed and the Bank of England hold firm, or worse, do what they should do and hint at further tightening, well, brace, assume the most relaxed position, because this is the end. The inflection point, the next 48 hours is going to tell us if markets have hit the bottom, and you can tell I'm smiling at that idea, or if there is more pain to come. It's just because I love a lovely bottom. The difference between a rebound and a deeper correction hinges on the outcome of the meeting tomorrow, and Powell, when he steps up with his beautiful foliage to that beautiful podium. The dust settles. As soon as he starts speaking, probably we're going to see a crazy move in the markets. Did we buy the dip, or did you just catch a knife, you crazy person? Anyway, that's the overall market news, which I think is a particularly good summary considering what people have been through recently. A lot to look to, a lot of important tickers there. Some that you might have also paid attention to tomorrow. You've got big news coming up on Z Bitcoins, a little bit of market structure there. Now, market structure incredibly important. There's GameStop, as you can see, a little bit of a gap. Price action retreated from that area, and we've seen a retracement back down again. Go to the Lipson channel, show you what that looks like if you hedged your bets with an option trade on GameStop, which, you know, couldn't have got a better entry. Absolutely perfect. Volatility to the top side, giving you the absolute best premium on those contracts. We gave you the trade the day ahead of time to protect your trade in GameStop. You've got that hedge then. Price action slipped down the low in at around $21 and change. Absolutely massive, massive, massive trade. Really, really significant. Pulling one out of the bag to protect the GameStop community. Trade spotting. Still GME from the streets. Talking about the streets and the worst house on the best street. It's Lipson time, baby, and I heard you and your request for these two beautiful circles. What does that remind you of? Well, cooking. And there's something cooking in price action on live person, a potential head and shoulders. Let's look at that conversation about market structure down on a 15-minute time frame and put it in context. You've got what is, ladies and gentlemen, an inverted head and shoulders in at around these levels. Now, there's various places you could draw it from. We're going to go in at around this inflection point. There's your shoulder. Here's your head. There's your next shoulder. Right now, you've got what is a resistance line running along there. I could have drawn that slightly better, and I will do. Spotter. Pull it out, eh? What is this? Right. There's your resistance where price action was below it. There was also this area to aim for, the top side of a gap. We mark that area in. And you've got a measured move from the inverted head and shoulders. Take it from the low to that breakout. Drop it on the area where you do it, and you see price action. It went the measured move, and it fulfilled the gap. And that requirement of price action was dictated by market structure itself. That distance of that gap gave the inflection point on the second low of the head and shoulders here, the lowest low in this local formation, which then led to the potential retracement back up to this inflection point, which was an obvious rejection candle, and then led to the measured move conformance. So the evolution of the inverted head and shoulders was actually, the die was cast here at this high in at around $1.10 and then seen at that gap at open. And this is extra context to add to that gap theory deep dive that we've been exploring over the last couple of years on the Discord. So if you want to clip this and add it to a post on the paid side of Discord with a tag about gap theory, then it'll be available for everybody who searches that in future, and they'll be able to add it to that chronological database of absolutely brilliant research on how price action performs and the evolution of these chart formations in respect of those gaps. So a lot to take in board on this tiny time frame, but the main takeaway, if you're new to trading or you're just interested in a simple concept to leave this part of the show with, it's about market structure on live person. Going back up to the 4-hour time frame, you can see you've got these lows across the bottom of price action. If we change that from logarithmic to, whoops, get back in your box, boobies. If you look at these lows, you can see you've got a couple of touches back here. This is typical tendency in a third touch. You've got that inverted head and shoulders here. You've got the break to the top side off the back of that. The retracement subsequently come down, and you found a pause at that support line. Also the diagonal breakout. You see that diagonal breakout across the top side also matches up with a couple of touches most recently. And so an awful lot of confluence suggesting that would be an area to find resistance is also here on the 4-hour time frame where you find a 50 simple. And that, credit to Banana Freeze, spotted that there at late last week and pointed out the potential for price action to come up and test that cross, which is ultimately what has happened. And you put all of that together, you can see that price coming close to testing on the daily time frame here this 200 period moving average and seeing a rejection, that rejection taking it back down to the inflection point, the previous formation in price action, and that's where price is now. Having seen a rejection from those confluent reasons why there would likely be resistance, and so many reasons leading to an awful lot of sell-side liquidity at that area. Back now below $1 and bargain opportunities for live person. When you put it in the context of that market structure, there's a reason for a bounce, there's a reason an inflection point here. It could well be that price action comes down, taste this 85, 86 level again. That's what we were talking about on Rocky's show last week. He's up tomorrow and he's going to give you brilliant take on a live person chart in combination with all stocks and crypto you could possibly want to find out about. So a brilliant week it's been here on the channel. An awful lot to talk about, an awful lot to learn, and live person offering up an awful lot of opportunities. If you're looking to hear more about crypto, I think you should be really interested in what's been happening recently. There's a touch of why that might be. There's the 200 period moving average on that daily time frame, price action hovering just below it, an important 236, also an inflection point, downward sloping diagonal. You had two important touches, 50 simple meets that at the minute. Could be a huge move back up to 92. It'd be 10 grand on the top of this thing at the minute, massive. If it breaks down, this is a broadening wedge, and it could come down and find a long-term support. Which of those two is it going to be, and why? There is an amazing lesson in every one a Rocky Outcrop show tomorrow, no different. I can't wait to see what's coming up on markets and all the different charts he's interested in. You can get yours on his show by just sending in a request using the links in the description below, and that also applies to this show. And you can support the show and a community by using those links. It's very much appreciated. Thanks to everybody who does that kind of thing. We appreciate you. Thank you. I also wanted to touch on, maybe you would call it a final thought, but actually there's a couple of different things I'd like to say about this volatility we've seen in the markets recently. And it's a bit of a plague when you're not necessarily focused on taking risks and growing and accumulating your portfolio, but instead wanting to avoid risk and deploy capital to take advantage of a potential retirement, this kind of idea. So if that is something that's relevant to you or people that you care about, then I'm eager to help you. And this here channel and this here community, we're not just building a world-class trading team with a very narrow focus. We want to be looking at all the tickers, we want to understand all the markets, and we want to have a proper expertise in each and a great holistic overview, and we want to inform that with a broad understanding of all of the concepts that can help each other in terms of financial planning. And retirement's a big relevant thing for a lot of people, so we're going to cover that in depth. I'm going to personally make sure that that's a big resource for everybody who's on the paid side of Discord to access, so that they can make the most of their future and all the hard work they're doing now. But if you're looking to give somebody advice about these kind of things, it's important to remember to properly frame the challenges that somebody in that position faces, and in the context of the current markets. Retirement isn't just a financial event. It's a whole life transition, and you move from that position of risk and accumulation to preservation, and a distribution of wealth might come later, and that's a profound shift. So positioning for that involves a lot of planning, and that planning requires a balanced approach to two competing forces: the financial longevity, you don't know how long you're going to need this cash, and the market uncertainty, which is today as prevalent as it's ever been. Particularly complex outlook at potential correction at the minute going on across certain indexes. The question being, is this pullback just a minor market pullback that's been widely anticipated by a lot of financial firms, or is it, as some analysts expect, going to turn into then something with higher highs, or some other analysts looking at this and it could be a potential recession? So there's a big danger, and that offers up a lot of opportunity for people that are looking for capital appreciation. But it's different if your perspective is about managing risk and extending that financial longevity. So the question is not just, are you bullish and focusing on long-term market resilience, or cautious and looking at then a possible correction or recession? but also how are you going to manage that uncertainty without taking risk? And that's the sort of thing I'd like to help people with. So these are the ways you frame the conversation if it is that you're having that conversation with people that are important to you. And it's a good idea to get their thoughts as much as possible, because it's a big, like I say, a life change, transitioning from accumulation to preservation. People will fear the idea of drawing down any of their principal. It's been a life focus to accumulate for a long period of time, and it's a big shift. Understanding the sequence of return risk, adjusting from growth to income focus, these are a completely different mindset, and it benefits all of us to understand how to approach that phase in life. So your current economic backdrop out there in America, obviously I'll keep you updated. There's lots of mixed economic signals, and the focus of this show and all of these shows is on how to exploit those opportunities as a trader. So but there's still takeaways for everybody in your life and yourself about how to measure and read these economic signals. The Fed is coming up tomorrow. How are they going to signal their commitment to controlling inflation? Corporate earnings, they're still strong, but they come under increasing pressure with the cost of money, and consumer spending is showing signs of weakening. Historically, these sort of conditions lead to brief pullbacks. The geopolitical risk is what adds to this idea of a longer term problem and a potential 2008 style issue. There is also issues with the mortgage market in America, so these nuanced aspects to the market will impact what sort of assets you're looking to invest in when you make these decisions. So there's different scenarios, bullish growth, neutral stability, a mild correction, a very bearish scenario with a recession. And effective planning for your retirement requires a flexible strategy. So understanding what your own thoughts are with regards to financial longevity, or understanding the requirements of those people you care about, is very important, and having that discussion with them is something I encourage you to do, and will help you help them if that's something you like. And if it is, let me know in the comments. If there's anything about today's show you appreciated, let me know in the comments, and I'll focus more on those sort of things. If you appreciated the market take, let that like button. And thank you very much for supporting the show, everybody who has donated or helped us try and achieve that goal in the chat box. I think there's sometimes confusion when I mention it. The goal is in the chat box, not for you to meet any certain expectation with regards to your trading portfolio with any period of time. I say and mean it, there is no help in rushing to be rich, and plenty of wealth in waiting to be right. That is why I choose the tickers I do and the focus I have here on the show. So thank you very much for everybody who pushes me, and I'll push you to be better, because it's not just building the best trading team in the world. We're also one of the best and most progressive groups at learning how to read the market. So a whole package there as a group of traders, and our financial literacy. Hopefully picking that up. We are defined by the weakest link in some of these aspects, so I'll be putting my absolute best into that, take advantage of all the opportunities here as part of the Rocky Outcrop and Trade Spotting community. And it'd be great to see you on the Discord. If you're new to Discord, don't fear, have lots of confidence. Everybody else that's been using it has also been new to it, and you'll find a lot of similar people to yourself who, before they joined, didn't realize how easy it would be and how much value they would get from it. And you get a free invite. You personally go to www.discord.gg/Rocky Outcrop, and you'll be able to join in with your peers and contemporaries who are, as I say, best trading group in the world, and the more funner place to make money. Thanks very much for watching. I really appreciate all of you. If there's anything you'd like to know, as I say, just let me know in the comments below. Thanks. See you on Discord.